Hey, hi, good day to all. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices. So, as usual, I'll be covering the latest trend bias for this week on the SPX 500, the NASDAQ 100, the Hong Kong 50, the Japan 225, and as well as the German 40 index. And most important, the key levels to watch after in the last 2 weeks, we start to see a bit of risk off in the risk asset space. Number one, driven by definitely the Omicron variant scare. And number two, also driven by this risk of this who's the next potential China big tech stocks that may delist from the US stock exchange that causes this underperformance in the Hong Kong 50 index among the rest of the world. And thirdly, most importantly, is the Fed. The Federal Reserve, Powell starts to turn. Finally, he actually threw in the towel to actually mention that inflation is no longer temporary, in his latest Congress testimony. Last also occurred last week. So right now, where are we expecting for the indices that we are actually looking at for the SPX 500, most important the Nasdaq 100, will be before we close 2021. All right, so before we start, let's take a look at the disclaimer slides first. Okay, so what we could before I jump into the technical details on the chart itself, let's look at the raw momentum analysis on the various stock indices across the globe. So yes, last week we start to see a sea of red across the globe, all the way from US to Asia to Japan as well as Europe, which is represented by the German DAX. So, but the fall that was actually recorded last week was actually lesser in magnitude compared to the prior week. What you could see over here, negative 1.22%. Last week, the prior week was negative 2.2. Okay, so it's pretty much self-explanatory. And also, I want to highlight is the worst hit was actually the China related market, which is the Hang Seng Index and the Hang Seng Tech Index. Okay, so what we could see over here is that negative 3.87% on the Hang Seng Index, but the prior weeks were lesser, negative 1.3%, slightly lesser on the Hang Seng Tech Index, and most importantly, the worst performing was actually the German DAX index, where it's got double whammy hit. Number one, prior to the Omicron variant, it really started to actually start to see signs of the Delta variant coming back into Europe in terms of infection of Delta variant start to rise as we approach the winter month and also during the holiday season when people start to travel. So definitely European, we call it banks, especially they're actually heavily related on cyclical stocks, were most of their indices were actually underperformed in the last 2 weeks versus the rest of the world. So, but this underperformance was greatly reduced last week at negative 0.57%. So what it means that over here, right, that last two and a half week of fearfulness in the market could be a bit overdone. And how do we measure the gauge of fear and the gauge of greed or complacency is by taking a look at the well-known VIX index, which actually taking into account the volatility of the S&P 500 from options. So that could give a good gauge on the risk appetite globally. Okay, so let's take a look at the VIX. So this VIX itself, right, is plotted at the bottom and the top of the SPX 500 chart. So what we could see is that last Friday, the VIX actually tested and retreated off from a major resistance at 32 level. So what is 32 level? Previously was the swing high area of March 2021, and as well as this descending trend line resistance that kept previous up move of the VIX since 15th of June 2020. So what it means that if VIX reach a relatively high level, there is actually an extreme fear. That means market participants are too fearful that could lead to a capitulation of the bears. Okay, this is how we look at VIX. Right? It's a contrarian opinion indicator. Okay, this how we actually interpret VIX. So what it means that over here is that VIX could come to a stage that there's too much fear in the market, where we may start to see a potential bullish reversal in risk asset like the S&P 500. If you look at in the past, where VIX hit this 32 resistance level, on the 29th of June, just recently only, we don't go too much back, 29th of January 2021, it managed to shape a bullish reversal. On the 30th of October 2020, it managed to shape a bullish reversal as well. And on the low of 15th of June 2020, a bullish reversal took shape as well. And what happened? the VIX actually rested at the similar level on Friday, which is 3rd of December, in relation with the price action. So could it be means that the S&P right now here, the 2.5 week of fall might be over, where we could potentially see a bullish reversal? Okay, so to answer that question, we got to dive deeper into the technical chart of the various indices. So let's now switch to our platform, okay, our CMC platform. So let us start off with the SPX first, the daily chart of the SPX. So what we could see on the daily chart of the SPX is, let's highlight the key elements. Yeah. So last week we mentioned that we look out for a further downside to test this support at 45.40, which has really been met on last Friday, where last Friday we start to see a low of 44.94. Okay, so what we could mean is that last week it has a kind of whipsaw around the 50-day moving average, but managed to actually tend to actually fight above it right now. Okay, right now. But the key support level to watch, right? We did highlight is at 4400. What is this 4400? 4400 is so close to the 200-day moving average, and as well as that 23.6% retracement from the low of wave 2 to the high of bracket 3. Okay, so what it means that this 23.6% is a kind of a minimum requirement for that corrective, because based on the Elliott wave approach, I believe, in my opinion, that we are now, this 2 weeks of decline is a corrective wave 4. So after this wave 4 end, we could still potentially see higher high, means new all-time high, rather than a major top that is being formed. Okay, so it could be another residual push up to end that major top. So, but the major top doesn't seem to be forming at this point in time based on the Elliott wave approach. So, but definitely it's not 100% foolproof. We got to look at other indicator as well. So, what's other indicator, mathematical indicator that is indicating to us that the RSI has managed to bounce off from a significant support around the 41% level. And this 41% level actually took shape on the low of 30th of September that give rise to a new impulsive up move or a bullish reversal, and also took shape on the low of 30th of October, okay, a bullish reversal thereafter, and as well as the low of 23rd of September 2020, another round of bullish reversal. So what it means that since it's coming very close to 4400 level, okay, so definitely this will be a key support level to watch. I could not tie it too tight because once we will get whipsaw. So for the strategy for this week is I will use 4490 slash 4490, which is the low of last week, slash 4450 as an intermediate support. But the key support level will be the 4400 level, as explained earlier on the daily chart. So as long as there's no daily close below this 4400 level, we are still potentially looking for a bullish bias on the SPX 500. Like what happened, like what I explained earlier on the elements and on the VIX itself. So what's interesting is the shorter term indicator also kind of reinforced this bullish bias by shaping this bullish divergence that was seen on the 4-hour RSI. So what's this divergence? Price action showing lower low, but RSI starts showing higher low. So what it means that this push down here is losing downside momentum, okay, as indicated by this bullish divergence. So all in all, it got to break above this intermediate resistance here that I drawn in by this descending trend line, taking from the high, the all-time high that was formed previously on 22nd of November, linking to the high of 25th of November. So now acting as a intermediate resistance at 46.40. So if we start to see a breakout above 46.40, it could actually reinforce this start of another potential bullish impulsive up move to retest the all-time high at 47.45, followed by a next resistance at 47.80. All right, as taken by a Fibo expansion target. So that's for the SPX 500. So, but nevertheless, if we start to see a daily close below 4400 level, then we could see the extension of this corrective decline or corrective wave 4 to actually target the next support level at 4270 slash 4240, which is the swing low area of 1st of October 2021. Okay, now moving on, next will be the NASDAQ 100. Okay, so what you could see is that the NASDAQ 100 fare much better. Why? Because it managed to test and held right at the 50-day moving average, which is also the former swing high area of 7th of September. So this will be a resistance zone, a support zone of 15,700 slash 15,520. So if you could recall, that was actually the downside support level or target to watch, where we actually have a bearish bias. So support level has been met. And what's interesting is that the RSI, it did actually hit exactly at the sweet spot, which is the support level of 34% level. But slightly above it. Okay, so maybe there's a bit more whipsaw going on, or at this 15,520. So definitely I will not use exactly at 15,520 as my key medium-term pivotal support for this week. Then the 200-day moving average will be at this last swing low area of 4th of October and 16th of July at 14,450 slash 14,380 level. So moving on to the strategy chart that I have for this week is I will use slightly lower than 15,520 as my key middle pivotal support, which is 15,290. So how do I derive this 15,290? Is actually the 61.8% retracement of the last multi-week up move towards the current all-time high level or 16,770, so 61.8%. So this level will be using giving a bit of breathing space. So that will be that the key medium-term pivotal support to watch for this week to have a bullish bias or recovery play towards at bounced first towards 16,145. So what 16,145 is like a descent, it's a descending resistance, very similar to the SPX 500 that I highlighted early on, linking from the highs, the all-time high of 20th of November and 2nd of December. So this now acting as a resistance at 16,145. So if we could start to see a bullish breakout above 16,145, then we could actually increase, the odds will start to increase to actually start to see a potential bullish impulsive up move, the start of it, to retest the current all-time high level at 16,770, followed by the next resistance, which is a Fibo expansion level target level at 17,010. So that's for the SPX 500. Now moving on next to the Hong Kong 50. So the Hong Kong 50, what we could see last week is actually trying to actually challenge this long-term ascending trend line support. It's a long-term circular ascending trend line support, starting from the lows of October 2008, which is the Great Financial Crisis low. This is where we could recall Lehman Brothers. Okay, so that is the support level that the price actually is trying to actually challenge. So why this level is so important because previously in the low of February 2016, it managed to shape a significant recovery, and as well as recently the March 2020 pandemic low as well. So right now it did a third test on it again. No, in fact yeah, one, two, three, the third test on it. So what's interesting in this third test is that it starts to shape a bullish, impending bullish divergence. Price action start to shape lower low, but the weekly RSI start to shape a potential higher low because this week hasn't ended yet. Okay, so it is actually trying to form a higher low. So what we could see is that if price action going to goes higher this week, definitely the bullish divergence is being confirmed. So what we could see over here is that potentially we will start to see a kind of a slowdown in this decline that since started of this major downtrend that was started since the high of February 2021, that is also in line with the year-long of regulatory clampdown on the private sector, particularly the China big tech stocks in mainland China, that actually having a negative sentiment towards Hong Kong 50 as well. And most importantly, a couple of big tech stock has a higher weightage in the Hong Kong 50 index, like for example, like Tencent and Alibaba. So right now, let's take a look at the strategy chart that we have for this week. So for last week, we actually turned neutral. Because of this mixed element. So what we could do is over here is that since it's testing is coming very close towards the lower boundary of the 23,000 level. So we will just flip to a bullish bias holding above 23,000 level. So as long as this level holds, we're just expecting at least a first push up towards 24,500. So what is 24,500 is actually the former swing low area of 10th of November and 24th of November, taken out now turns into a resistance. If you could see a 4-hour break above 24,500, then we could be more confident to say that, hey, there will be a potential further rebound to at least hit up towards this descending trendline resistance that is in place since 11th of August 2021 that managed to cap previous rebound of 7th of September, 25th of October, and as well as 16th of November, now coming to a resistance at around 25,800 level. So if we start to see a kind of a weekly close below 23,000 level, so definitely we will start to see the start of a major downtrend or continuation of this major downtrend that is in place since February 2021 high to actually target the next support level at 22,100 level. So what's 22,100 level? 22,100 level is a Fibo expansion level, and as well as this long-term expanding wedge range configuration that I draw that is in place since 18th of Feb 2021 high. Okay, so the lower boundary of this expanding wedge is at 22,100 level. Okay, now moving on next to the Nikkei 225, the next Asia indices that I like to cover is last week we also have a bearish bias on the Nikkei 225 looking for a further downside to test a major range support level. So what is this major range support level? In fact, a range configuration that is in place since the 30-year high that was at 16th of Feb 2021. Previously, on September, it tried to break above it, but can't break, and it start to swing back down again and retest this low. All right, so this is a kind of a major range configuration that is starting to form already. So last week we actually expect a test of it at the upper boundary, which is at 27,650 slash 27,500 level. So last week it printed a low of a low of this 27,486. Okay, so what we could see is that interestingly, upon hitting the lower boundary of this major range configuration, the RSI also start to shape a bounce off from it ascending from its oversold region as well and start to shape a higher low. Okay, so what it means that over here is that we could actually start to mean that the last week or so of push now seems to be a bit overdone, where it's potentially ripe now for at least a multi-week rebound to actually take shape within this major range rectangle range configuration that is in place since 16th of Feb 2021 high. So what we have this for this week is that we flip to a bullish bias, holding above 27,500, looking for a first push up in first step towards 28,500, 28,700, which is the former swing high area of 26th of November, 30th of November. If we can have a breakout above this 28,700, then we could actually increase the odds for a extension of this potential rebound towards the next resistance at 29,500. So what's 29,500 is actually the descending trend line in place since 14th of September 2021 high. That the previous rebound of 16th of September, 16th of November, and 22nd of November fails to break above it level. But also interestingly, the 4-hour RSI also start to shape this bullish divergence, lower low on price action, but higher high on price action, and now it's attempting to break up from this descending trendline resistance on RSI. So what it means that the short-term momentum has started to see a bit of exhaustion, where we could actually support for at least a further potential rebound, a multi-week one, within its major range configuration on the Japan 225. So definitely, if we start to see a 4-hour close below 27,500, we could see an extension of this corrective decline to actually test the lower boundary of the range, lower boundary support of this major range configuration at 27,000 levels slash 26,880. Now, the last index will be Europe, will be the as represented by the German 40 index. So what I could see on the German 40 index is that since the low of this major uptrend low of 19th of March, it's been still trading in a series of higher high, higher low. So what we could see is that last week's scare managed to push it down below the 200-day moving average. All right. So, but what's interesting over here is that the RSI has been pretty much positive. Why? Because the RSI managed to exit from the oversold region after hitting very close to a key significant support at the 20% level and started to shape a series of higher high and higher low. So, but price action is still mixed because price action doesn't seem to confirm with the RSI, as it's still being kind of stuck between the 200-day moving average and the 100-day moving average, which is the 100-day moving average represented that this previous range support here, previous support here now turns into a resistance at 15,800 slash 700 level. So what we could have last week we have a neutral stance between 15,800 and the low of 6th of October, which is 14,750. So all in all, right, still no change. We're still expecting a kind of a sideways movement for this week on the German 40 index between 15,800 and 14,750. So unless it has a 4-hour close above 15,800, then we could start to see a push up to at least retest the current all-time high level at 16,600, 16,300 swing high area. So then if we start to see a 4-hour close below 14,750, then it could take us much down lower to the next support at 14,330. Okay, so with that, we will have kind of a more preference to actually maintain a neutrality stand on the German 40 index. Okay, so I kind of wrap up the technical configuration or the technical trend bias at the key levels to watch for this week for the major stock indices across the globe. So what we could see over here is that as highlighted by the VIX index, the last 2 weeks of sell off or push down is kind of reached a fearful stage where the bears may capitulate and we may start to see a potential bullish reversal at this juncture on the US stock market. That's why we are flipping to a bullish bias on the S&P 500 and the NASDAQ 100 and even the Hong Kong 50 index to actually play a short-term rebound, holding above the lower boundary of this key support level at 23,000 level. Also turning bullish bias for the Japan 225 index to actually heat up towards the top part of the major range configuration. And due to mixed element, we are actually maintaining our neutrality stance on the German 40 index. So with that, have a great trading week ahead, and I see you all next in my next video.